Imagine this. You wake up one morning and hear on the news that the banks have been shut down. The first thing you do is grab your phone to check your balance, but the app won't open. You go to the ATM closest to your home and see the message on the screen. Out of service. Shops are open, but no one accepts cards. Gas stations say cash only. Rent day has arrived and the landlord can't accept a transfer. You try to calm yourself. The system must be down, it'll pass in a bit, you say. But then you notice something. The streets feel different. Lines have formed in front of bank branches. People are quiet but visibly tense. Supermarkets are packed. Those who have crumpled banknotes can pay because cards are useless, and those without cash are losing their minds. You go home and turn on the TV. A ticker runs across the screen. The financial system is under extraordinary review. And at that moment, a cold thought runs through you. Your money is not where it's supposed to be. The money in your account was never something you could freely withdraw. It was always just a number on a screen. And that damn screen is now dark. This may sound like a dystopian novel, but it isn't. This nightmare has happened before, not in unstable, faraway countries, but in nations that considered themselves modern, safe, and secure. And when it happens, the rules change overnight. Argentina experienced this in 2001. After years of bad governance, debt, and IMF packages, the country was cornered. People rushed to convert pesos into dollars and move their money abroad. Cash was rapidly leaving the banks. The government's response was blunt: shut the doors. They called it corralito, meaning little corral, but for the public it was nothing less than a cage. Withdrawals were limited to 250 pesos per week. Dollar accounts were forcibly converted into worthless pesos. Money saved for homes, businesses, and retirement evaporated within weeks. People flooded the streets, banging pots and pans. A middle class that believed it was safe was suddenly shattered. When banks closed, bread, milk, and rent became unreachable overnight. And this didn't only happen in Argentina. Cyprus, 2013. The European Union imposed a bailout and banks were frozen. People woke up to learn something on a day they probably wished they hadn't. Deposits over 100,000 euros had been seized to save the banks. Those hurt the most were not the rich, but small businesses that couldn't pay wages, retirees who couldn't access their pensions, and families who couldn't pay their children's school fees. Then came Lebanon in 2019. After years of corruption and collapse, banks announced capital controls. No matter how much money you had, you could only withdraw a few $100s a month. People went to banks not with documents, but with guns. And every time the result was the same. The money people thought was theirs wasn't really theirs at all. Even the United States experienced this. In 1933, during the Great Depression, President Roosevelt declared a nationwide bank holiday. For 4 days, not a single bank was open. No cash, no wages, only uncertainty. The system eventually recovered, but consider this. Even the richest country in the world had to completely shut down its banks to prevent collapse. Because banks do not store your money the way you think they do. They operate on a fractional reserve system. Only a small portion of deposits stays in the vault. The rest becomes loans, debt, and circulates through the system. If everyone asks for their money at the same time, that money simply doesn't exist. Governments know this well. That's why in times of crisis they protect banks, not citizens. They freeze withdrawals, devalue money, and make the public pay the price. Now think seriously. If this happened in your city tomorrow, what would you do? Do you have a week's worth of cash? Could you last a month? How would you survive if the numbers on the screen suddenly disappeared? This is not paranoia. It is accepting reality as it is. The financial system was built to protect itself. And when stress begins, you realize banks are not safe vaults but fragile structures built on trust. When that trust cracks, control is lost. This is not a fear scenario, this is history. It happened in Argentina. It happened in Cyprus. It happened in Lebanon. It happened in the United States. And history shows this clearly. Everyone who said it can't happen here eventually experienced it. Banks don't collapse overnight. They collapse because of how they are built. As long as trust holds, they stand. When trust breaks, they spiral out of control. As for deposit insurance, it is largely psychological. If everyone demands their money at once, it won't be enough, but it exists to keep you calm. When banks close, life comes to a halt. Wages are delayed, supply chains break, shelves empty. In Greece, people waited hours in line for just 60 euros a day. Weddings were postponed, surgeries were delayed, children were pulled out of school. Smartphones, crypto, fintech, none of them changed this reality. In fact, they made us even more dependent. If servers crash and accounts are frozen, people are left with nothing but empty numbers. One decision, one signature, one technical issue, and a social crisis erupts. Unemployment, panic, bartering, rebellion. That's why the lesson is crystal clear. Don't confuse access with ownership. If you can only access something but don't control it, it isn't truly yours. Being able to stand when the system fails, that is real financial freedom.